Good day, fellow investors. Google might be the most discussed value investment out there. And here I received a great email suggesting to discuss Google because the valuation seems incredibly low for a growing company that has its fingers in nearly everything we interact online. Furthermore, headlines claiming search is dying aren't supported by actual performance of the business. Earnings reports were excellent. AI, Google is everywhere, so they can acquire competitors, grow, whatever. It is like TikTok is going to kill Meta, and we have seen how has that worked out for Meta with a 10x. If we look at the most trending stock on Value Investors Club, then Google is their top number one. So let's dig into the risk and reward of investing in Google now and whether it really is a value investment and will ChatGPT kill it. We'll even ask ChatGPT about that. We have discussed Google a few times, of course. So I have said that it is likely going to make you money, all else equal, from price of 170, but there is also this risk of ChatGPT in addition to the huge increased capex to keep its market position that was negatively seen by the market. So the key question is, of course, will Google's search dominance continue? Well, let's ask the competitor. Will you impact Google's search dominance? Of course, ChatGPT is much better because immediately it says, great question. And a big question, of course. So, tools like me could impact Google's search dominance over time, but it's not guaranteed or straightforward. First, we have to discuss the changing user behavior. So, depending on what you are looking for, there is a shift from some search traffic to, let's say, ChatGPT. There is also discussion on quality of results. Google is still the best for fresh, broad, deeply indexed content. So that is something. Google is also going into AI, and we'll see how those trends go forward. Bottom line, as ChatGPT says, AI is reshaping the way we search for data, and when I look a little bit over the last 25 years that I've been investing, you always see these trends and they are there and then they suddenly later become great. I remember buying something on Amazon 15, 20 years ago and I didn't grasp, okay, this is going to be huge in the future. However, it became really huge with some other things. Some didn't happen, some did happen, but with ChatGPT, will it change our behavior and all the other AI tools? That is the key question. And if we look at the current search ad model and whether it can be disrupted, of course, Google makes money per click, per viewed ad. What happens when AI disrupts that flow? Fewer clicks. Also, if Google goes into AI, it will reduce their own click-through rates. It will cannibalize their own advertising machine. And therefore, there is the economic risk for Google. If it doesn't evolve, users will and are already migrating a little bit. If it embraces AI fully, it risks cannibalizing its most profitable revenue stream. Of course, Google is Google, very smart, so they'll find a way to navigate that, most likely. However, that is the risk and reward. The big picture is that we are moving towards an answers economy, and I think that this ChatGPT now and AI is just the start. So it is here already, and as I said, it is just the start. It certainly increases the risk for Google, makes it more of a bet rather than a value investment, because as behavior is shifting, we are seeing that shift. More and more people get used to using ChatGPT. And the key question is not, okay, now still Google is doing great. The key question is how it will look like 2, 3, 5 years down the road, after all the huge AI investments have been made, after AI improves, it's still not as good as it can be. When I research something, I still need to look into it to understand, okay, here it's missed, here it doesn't get the nuances, here it didn't see the key factor there. So you will always need a human there to understand what you're looking for, but it's getting better and better. Again, from an investing perspective, the 75 billion spent and likely to continue, we don't know what will the returns on investment be there. Wall Street estimates continuation in growth, likely double-digit growth, 20%, then 7, then again 12, 11.5 earnings per share in 2027. That will be a low P ratio going forward P ratio 14, so everything looks great. All the numbers from Google look great, huge growth. Search is still the key and dominant factor there, also growing. Other things are too, but still search is the most dominant. All else equal, we have a P ratio of 18 and 10% growth from Google. There can be a recession, less ad spending, less this and that, but still, they are growing, they are investing, and they will likely try to do whatever they can to keep their strong position. If we look at the cash flows, the free cash flows are good despite their huge spending, so they can do their buybacks, the small dividend yield. And I have decided to reintroduce Google on our quadrant just to make it more interesting. And 10% growth, P ratio of 18, I think all else equal, it should deliver around 12% long term, but I have put it on the higher risk sector of my quadrant. Here is low risk, here is high risk, with a good reward, but still here high risk because of the potential disruption. It is here, everyone is seeing it. I bet you are also starting to use ChatGPT for whatever you do. So that is something that's changing user behavior, which is a dangerous thing when it comes to investing. And therefore we could say Google is fairly priced for the risk and reward. Is Google a stock to buy? To ask ChatGPT, well, of course, they always say that depends on your investment goals, but P ratio is now already 18, thus undervalued compared to the market. Everything else looks good. Bull case, AI integration, innovation, but also search is still king, diversification, everything looks good, strong balance sheet, great company. There is also the bear case, AI cannibalization risk, competition, high investments, regulatory pressures, and valuation ceiling 18 is not cheap, of course, but I think ChatGPT here, for example, thinks that it is 25. It is not. It is on the cheaper side, but it is a yes if you believe that Google will do well in the environment going forward. Maybe not if AI disrupts it. So definitely times will not be boring with Google. It will not be like watching paint dry. Therefore, it might not be a value investment despite being the most discussed stock on the value investors club. So I think that is the risk and reward. I think you will make money at least somewhere in the next 2 years as search is still strong, as that is still working, not yet disrupted. So you can buy with a small allocation, I think, for a portfolio. You can buy Google because of the good likely returns, but the risk and the change in user behavior is certainly there. So it's not easy to put 20-30% of one's portfolio in Google because that would be too much of a bet. Thanks for watching. Let me know what you think in the comments. I'll see you in the next video.